Welcome to How to Fathom It. This is part of our product webinar series. I'm really excited to have you all with us today. So whether you are brand new to Fathom or you've been using it for a while, this session is about kind of helping you get a little bit more value out of the platform, because we'll dive into some practical tips, showcase how powerful the features are, and share ways to save time delivering deeper insights to your clients or your team. So today's session is all about taking control during uncertain times. Let's face it, planning for the future isn't always very easy, especially when things keep changing. This webinar, we're going to show you how to take back control using Fathom's Micro-forecasts and Scenarios. So these tools will help you model out what-if situations, respond faster, and provide clear guidance even when things feel kind of a bit uncertain. I am your host today. I'm actually a senior account executive, so my job title is wrong on there, but doesn't work. It doesn't matter. I just help customers, whether they're new to the subscription, they haven't subscribed yet, or they have onboarding, and kind of help with everything. And then I'm joined with Anthony, and he will be leading the actual demo, showing you how to get your hands on with Fathom's Micro-forecasts and Scenarios. Again, I want to note, and I'll probably say this a couple times, I'll be doing the Q&A during it. So please send your questions through the Q&A, not the chat. I don't know if there's a chat on this one, but sometimes people send them there. It's a bit easier to keep track of them in the Q&A. And then at the end of it, I will spend some time there. But with that, let's take a quick look at the agenda. So we'll start by exploring the problems many businesses face when planning for the future. Then we will dive into the challenges, why traditional forecasting often falls short. Next, we will show you how Fathom can help with its powerful tools like micro-forecasts and scenarios. And then finally, we'll wrap up with that live Q&A. So anything that I don't get to during the presentation. And if there's anything that I can't answer, or maybe I feel it's better to have a one-on-one meeting, I'll just let you know, and then we can get you connected with the right person on our team to maybe dive in a little deeper. Maybe it's kind of like a very intricate question to your business or one of your clients, and it might be better to just answer one-on-one after the webinar at another time. Okay. So let's start with the problem. Uncertainty. Right now, businesses everywhere are feeling the pressure. Consumer confidence is shaky, making it harder to predict demand. The future feels uncertain. Many variables are in play. And so even when there's data, making decisions can stall, or kind of what we call analysis paralysis. It is no surprise that strategic planning can get pushed aside, but it's exactly the reason why it's important to have the right tools to make a difference, so that you're maybe not pushing aside planning and strategic planning. So what's needed in today's fast-changing world is smarter forecasting and scenario planning. Traditional forecast tools can often be complex, time-consuming, maybe inflexible. And so, what are the challenges with that businesses are facing? Well, first, building and maintaining a forecast can take a lot of time and a lot of effort. And that time and effort can be better prioritized for other things. Second, relying on a single forecast often isn't enough in uncertain times. You kind of need to plan for multiple scenarios. And then finally, the fast changing business environments means the forecast can maybe become outdated. And so that's why it's important to not only have multiple forecasts, but be able to really be very flexible and change it as maybe new information is arising within the company or the world, whatever's going on. So imagine this. What if you could communicate a forecast that covers all potential situations with everyone, and they can understand it and they can then act on it? A forecast that's simple to start, it's easy to customize, and it gives you the power to quickly create and plan for multiple scenarios, updates in real time, and it's easy to maintain with seamless with your professional reports and everything kind of just in one place. So that's the kind of forecasting that drives smarter decisions, and exactly what we're going to show you today. But why exactly Fathom? Just a little background again for some of those people that may not have ever heard of Fathom before or they are brand new. So Fathom is not more, it's more than just the numbers. It brings together actionable financial insights, fully customizable reports, and smart business planning tools like forecasting all in one place. Whether you're making sense of the past performance, you're looking at your historicals, trending, building those types of reports, or you're planning for the future, Fathom will help you make confident data-driven decisions, and you can put everything in one place. So a little bit on how Fathom works. So Fathom connects seamlessly with your existing accounting platforms. So it will turn your raw financial data into clear insight dashboards and reports. Obviously, it flows over into the forecast. It's designed to be easy to set up, keep your data connected and up to date from your accounting source system. All right. So I am excited to hand this over to my colleague, Anthony. He will take us inside of Fathom and actually show us why relying on a single static forecast just doesn't always cut it anymore. How micro forecasts empower you to quickly model real world changes. This can be things like hiring decisions, asset purchases, price tweaks, and how easy it is to build and compare realistic best case, worst case, custom scenarios, and how to transform your forecast into clear, compelling visuals and drive smart conversations and better decisions. So I'm going to pass this over to Anthony now. Just have to find where I do that.
My name's Anthony, and I'll be talking to you about how you can overcome some of the challenges involved with forecasting in difficult economic times and uncertain environments using Fathom. So we'll talk about 3 challenges today that make it difficult to forecast in these times. The first one will be that it's hard to build and maintain a forecast in the first place. Forecasts can take a long time to build, and then the numbers need updating all the time. It can get pretty difficult to do, and if it takes a long time, there's time you could be spending on other things. So we'll talk about how Fathom can make that side easier. Oftentimes, one forecast isn't enough, and it's funny in the world of finance and accounting that forecasting is basically the only thing you do where as soon as you've finished it, you know that it's not correct. You know that all of the numbers that you've predicted or that you forecasted are not going to land exactly on. It would be somewhat of a miracle. So you need the ability to have different situations going on and to flex that forecast, especially when things are so uncertain. And finally, that forecasts can become obsolete very quickly. Things are changing so much. Every month there's a new economic thing happening, some political shift. So forecasts that we create 3 months ago already today are so different. The technology landscape changes too. So how can we make sure that we're always able to keep our forecast relevant and not become obsolete? So I'm going to jump into Fathom now. So this is our Fathom homepage for those of you who've seen it. For those of you who haven't, what I'm seeing here is all of the businesses that I have imported to Fathom. Their names here along the left. And if I hover over any of them, I can see all of the different things I can do with that business in Fathom. Now, obviously, today we'll be talking about forecasting. So we're not going to touch on analysis and reporting, but we have lots of other resources that will talk about those. And thinking specifically about the first challenge that we mentioned, which is that it's hard to build and maintain a forecast in the first place. We'll start off by talking about the nuts and bolts and how you actually build that forecast in Fathom and how the tools available make it really easy compared to other alternatives. So I'm going to click on a business here that doesn't yet have a forecast. And I'm taken to a screen with a bit of an informational video on how to build and a let's get started button. And then I'm given 3 different ways that I can create a forecast in Fathom. So all of these 3 ways are pretty quick and easy. They should all take you less than 10 minutes. One of them will take you a few seconds. And they're designed to get you about 50% of the way there before you start getting into the granularity. So 50% of a forecast in 10 minutes or less is not bad. So starting on the left here then, our custom forecast. This is a very flexible way of starting all your initial values. So it has 4 steps to it. So we can see those 4 steps on the left here. And the first step talks about value rules and timing profiles. And these are things that we can apply broad brush to big sections of our profit and loss. So the value rules are just how are the values calculated in the profit and loss? What are the different methods we're using to forecast the actual P&L values? And then the timing profiles are how and when those hit the balance sheet. So that could be because a revenue is paid in cash. When does the cash actually hit the balance sheet? When should it hit AR, etc.? So we'll talk a bit more about those in detail in a minute, but those two concepts, value rules and timing profiles, and applying them broad brush to the P&L are a quick way of getting some initial values. Second step is very simple, and it's basically just what are my default linkages between my P&L and my balance sheet? Where does cash normally go? Where does AR normally go? And then later on, we can deal with any cases where it's different. The third step is around tax settings. So we can just set up all of the taxes that are relevant for the jurisdiction that the business operates in. And then we'll look at this a bit more closely shortly, but it will automate all of the tax postings in and out for that. And finally, if there are any loans and depreciations that we need to account for in the forecast, or any fixed assets that have depreciation, any loans that need interest paid on them, we can set those up here, and that will all run very smoothly as well. The link to existing budget way of setting up a forecast is pretty much exactly the same as what we just saw, but wherever it can, if you have a budget imported to Fathom, it will use those budget figures to calculate the P&L. And the final one is our quick start forecast, which is literally just a one click on this forecast button, and it will spin up a load of numbers for you. The way it does that is, broadly speaking, it tries a few rules, it sees which one predicted your past best, and it uses those to predict your future. Pretty clever, and it will get you 50% of the way there. Once I've done my setup, I will have something that looks like this, which is going to be one I prepared earlier. And this is what we call our main grid in Fathom's forecasting. So what I have is a grid like P&L, the same for my balance sheet, the same for my cash flow, and I have a drivers grid if there's any drivers that I want to incorporate into my formulas. So starting with the P&L, what we're going to do is we're going to take a bit more of a close look at the value rules and timing profiles that I mentioned to see how that really helps us to build and maintain this forecast and make it not such a chore to actually have it running. So I'll just click into my first revenue account, which for me is T revenue. This business is a coffee shop. And on the right here, I can see the value rule and the timing profile that are already set up onto this account. So I'm going to first look at value rules, which is here I've got smart prediction. I'm going to click new rule, and we're going to take a look at all of the possible rules. So the first one is that smart prediction. And basically what that is we can choose a certain number of past months, 24, 12, 6, or 3. And then we can choose a calculation method of either taking an average. So average would be what's the average of the past 12 months. And a linear regression would be drawing a line of best fit through those last, in my case, 12 months. We can even add seasonality into that. So a really, really quick and easy way to say what was happening in the past and then give me a projection. The next one is using a previous period. So this is very simply, if I'm using last year here, whatever the number was this time last year, give me that number again. And maybe I also want to apply an increase for inflation or better performance or whatever. I might choose to put a constant number in there. So if I, for example, have a rent expense that's always $500 a month, I could just make that a constant $500 a month. And I could also add in some, yearly or annual step changes to that amount too. I could build my values based on a formula or using my drivers that we saw earlier. A pretty common one here would be if I have a revenue account that's derived based on a markup of a cost of sales account, I might link those two. So I think I'm looking at T here. So if I build in my T cost of sales account, and I say that my markup is, let's say, 150%, I just times that by 1.5, and then I should have my T revenue derived from my cost of sales revenue. Lots of different things we could do with that. And then finally, I might choose to link an account, a specific account, to any budgets I have in there. Maybe I absolutely know that that's going to be the cost because it's been agreed already, and so we can just link a cost to a budget. So those are all some really useful ways that we can calculate values pretty quickly, and I can have different ones of those rules at different periods. I can also just click into a cell and type a number if I need to. And now on the timing profile side, so for me, whenever I built a forecast in practice, the linking the balance sheet and the profit and loss was always the biggest pain. It was really difficult to make everything work. Involves a lot of checking and manual auditing, and then having that flow through a separate cash flow statement. Kind of tedious, kind of difficult, kind of not what you want to be doing. So these timing profiles, in my opinion, are a real game changer. What they allow you to do is they allow you to set a timing type. So basically, broadly speaking, that's like an invoice cadence. So you might be invoicing or being invoiced monthly, it might be quarterly, something different. And based on whatever cadence you set there, you can say when in general is the cash received. So if I was using a monthly, I might say that this is a revenue, 10% of my customers pay me the same month that I sell them the thing, 30% a month after, 60% a month after that. We might even include prior months if there's any who pay up front. If I had something more like a quarterly, I would choose when do the quarters of the invoice run, like when am I invoicing them? Is it January, every January, April, July, October? When do they actually pay the invoice? And then based on that, where should they be posting? So if I, for example, said that they paid me midway through the quarter, there'd be some deferred revenue posted to here, which would be released to the P&L here, and then there'd be some accounts receivable afterwards. So we would accrue an accounts receivable and get the other way around and get the payments drawn down from there when they hit cash. And whenever I build a new value rule or timing profile, I can create a note to say why I've built that. These are called assumptions notes. We'll see shortly how we can surface those in a report. We can build a note to say why we think that thing should be that way. Great. So those are our value rules and timing profiles. We'll now quickly touch on the taxes that we spoke about a minute ago, because that's another big pain that we need to make sure is built in correctly to our forecast. So I'm going to head down to my settings in the bottom left here. Then I'm going to go to tax. And this screen looks pretty similar to what we saw in the setup. So if I've got any taxes set up on this screen, I can make sure they're allocated to the right accounts, make sure that the payments are set on the right cadences, whether it's quarterly, annual, monthly, whatever it might be. And then Fathom will work out all of that automatically. And you can even go into the individual tax accounts and see all of the ins and outs. So lots of different ways that Fathom combats that first challenge of it's hard to build and maintain a forecast. It takes you less time and it will always stay up to date. Cool. So challenge number two is that oftentimes one forecast isn't enough, right? Because we might think, well, this is what I think, but there are these 5 different things that could happen in the future. So how have I accounted for those? So we're going to talk about 2 different tools that help you to make sure that you've got a robust and flexible enough forecast or set of forecasts to account for different things that might be going on in the future. The first of those is micro-forecasts. So this is a concept quite specific to Fathom, unique to Fathom. So if I go to my little microphone thing here, microscope thing here, this is where our micro forecasts sit. And the way to think about these is something like a mini version of a forecast. It can be a self-contained mini forecast, or it can be one that I fully integrate into my main forecast. And they help me to model specific business events that may or may not happen. So I've got some here that are new hires. I've got some asset purchases, loans, marketing, dividend payments, etc. Loads of things I can do in there. And I don't even have to include them in the forecast. I can choose to include them or not by toggling them on and off. So I might just be looking at them to know what would happen. So let's use this in a situation where I don't know what's going to happen, difficult and changeable, uncertain environment. So I've got a junior barista planned to hire here, but it might be that I actually don't know if I might end up hiring a senior barista. It might be that I think if my revenue turns out a bit better than I thought, then I'll go for someone a bit more experienced, maybe spend a bit less time training them and hopefully get some more sales from them. So to create this micro forecast to see my senior barista hire, I'll click create micro forecast down here. I'm going to call my micro forecast senior barista. And I'm going to categorize them as a new hire. And let's say I'm thinking I'll maybe hire them in May. I can create that micro forecast. There's a few ways we can then actually build the forecast. So we've got some wizards if it's a loan, an employee, or an asset purchase, or if it's something completely different, something quite bespoke, you can model it out account by account. So mine is obviously hiring an employee. So I'm going to use the employee wizard. And then I just answer Fathom's questions, and it's pretty simple. So is it a permanent or temporary employee? It's a permanent. What's their salary? So this is an imaginary country I'm in, so I'm going to say in this imaginary country, 60 grand for a senior barista. And then what account are their wages or salaries paid from? So I'll find my salaries account. I'll hit next here. And then because I have set up my tax rules, as we saw previously, Fathom says, cool, I know what your tax is, so you just go ahead to the micro forecast and I'll do the rest. And then we have here all of the ins and outs, including taxes associated with hiring that senior barista. Now, if I go back to my forecast and I find my salaries account, which is under my staff costs, and I expand that out, I can see that both my junior and my senior barista are making up part of the total amount here. So there's my 5,000 a month for the senior barista, and then whatever I've got for other hires planned here. So we can layer it in, or I could choose to not have it in the forecast. Great. Now, so we want to see what would happen if I do or don't hire one or the other of these. So a really cool tool for that is what we call the business roadmap, which is up here on the left. So the business roadmap lays out all of the micro forecasts that I have planned for the year on a map timeline style view. And what I can do here is I can choose to see what would happen if I hired these people at a different time, or choose to not hire them at all. And I've also got this thing at the bottom here you might have spotted with cash on hand. We call this our quick metrics, and we can have up to 5 really important KPIs down here. And I can see them either numerically or as a graph. And I can see what would happen to these KPIs if I do things differently. So let's, for example, say, well, in this world, maybe the senior barista doesn't get hired until quite a bit later in the year. So I can just literally drag and drop them along. All of these numbers change for me. I can see that my interest cover improved in a couple of places there. Or it might be simply that I don't hire the senior barista, so I can toggle that one off. Or it might be in the other case that I don't hire the senior barista, but I do hire the senior and I don't hire the junior. So in real time, I can really make this forecast flexible and robust and see different ways the world might play out. Now, the other thing we might want to do with this is create fixed versions of the world where I do or don't hire the junior or senior barista. And that's where we can use Fathom's scenario planning. So up here, if you look at the bubble, we've got the scenarios. And when I click that out, I can see the ones I've already built, which I've got best case and I've got worst case, and what happens if I improve or my AR or AP days. And I want to build a scenario where, so in the main forecast, I'm only hiring a junior. I want to build a scenario where I'm instead hiring the senior. So I'm going to hit create scenario down here. And in this scenario, the main thing I want to account for is senior instead of junior. So on the right, it's got all of the possible micro forecasts. I just want to unhire the junior and instead hire the senior. And like we said before, the reason I might do this is because my revenue actually ended up higher than I thought it would. So what I can do is I can add a configuration. I can do quite a few of these. And I'm going to add one that basically increases across the board my revenue by 10%. It's a hypothetical. So in this world, my revenue is 10% higher. I hire a senior instead of a junior barista. We'll call the scenario senior barista. We'll create that scenario. And now really quickly and easily, I can flick between that scenario or other scenarios or just my base, my normal one. I can also do that from my main grid, and you can see all of these numbers will update in real time as I click on and off my different scenarios. So pretty cool and pretty easy way to make sure that it's robust and flexible and combats that challenge of one forecast is often not enough in these sort of uncertain times. The final challenge that we'll talk about was the fast obsolescence, right? These forecasts become obsolete quite quickly when things change so much all the time. Now, the first way that Fathom makes your forecast relevant all the time and up to date and lowers the obsolescence is that every time a new set of numbers rolls in, the future numbers will update. So you might see here that the numbers on the left are gray and the numbers on the right are white. So the gray numbers are my actuals coming through from my source accounting data, and the white numbers are my forecasted numbers. So up here on the right, I have the month that the actuals end. So let's pretend actually that we're in February. So now my gray only goes up to February because that's my actuals. And if and when my March numbers roll in, well, I'll change this to March, everything updates for me automatically. So any rules that were looking backwards and depending on prior numbers will automatically update so they're the most up-to-date possible at all times. So that's one way that Fathom makes the numbers stay relevant. The other thing that we need to account for is that in recent times, there are things changing all the time. There's lots of world events happening, lots of technological events happening, which mean that things that we didn't know were going to happen 2 months ago are happening regularly. So we might get to a new month and then realize that something quite drastic has to change. So the way we can do that again is with those scenarios that we were talking about. So let's take the salient example of tariffs. Let's say that we know that next month a new tariff is going to be introduced, and it's going to be a 10% tariff on my sales to another country. Let's say I sell coffee to some other country. And I might think that because of that tariff, I'm going to take a roughly 10% hit on my revenue. We know that because of that tariff, I'm going to roughly take a 10% hit on my revenue. So I'm going to go back to my scenarios. I'm going to create a new scenario. This time I'm going to call it 10% tariff. And we'll keep all of the micro forecasts the same. The only difference for the moment I'll do is that my revenue will this time decrease by 10%. We might also think that maybe there'll be tariffs on my imports as well. So we could also, if we wanted to, we could add like an increase in cost of sales by 5% due to tariffs. So I'll leave that in as well. It's all hypothetical at this stage. But what I've managed to do there is in a few clicks, I've managed to flex my whole forecast using the previous forecast as the starting point. I've managed to flex it completely based on some very new event that I didn't know was going to happen before, but changes quite a lot. Great. So now how do we actually look at this forecast and these three challenges that we've overcome? How do we look at them in a report? Well, one thing I will say is that all of the forecasting module in Fathom is a bit like an interactive report. So everything I'm seeing here is obviously a grid of numbers. It's highly auditable because if I wanted to know how a number was calculated, I can just click that number. I get a full breakdown. I get the rules that I've applied. That's great. But also understand that a lot of the time we want to see these in a report. So I'll jump to my report section now. And lots of ways you can build reports in Fathom. And again, this is not a training session, so we won't go through all of the step-by-step and nuts and bolts of reporting, but your account manager or engagement specialist will be more than happy to help you with that. But I'm going to go into a report that I've been drafting and show a few ways that we can report on this. So the first table we have here is a trended table with my actuals until my current month of March. And then I'm projecting forward using a forecast. You could use any of your scenarios in there, so it doesn't just have to be your baseline. And we get to a really useful outturn column there for the year. So I can see where do I think I'm going to end up based on the most up-to-date information being actuals right up until right now and most up-to-date forecast for the rest of the year. So that's a really useful one. Scenario analysis is possibly, in my opinion, one of the most important elements that we can report on in this subject of uncertainty. So what I've got here is forecasting my revenue, and it's got my actuals up till current month, and then the different scenarios fanning out going forwards. And I've only got forecast and best case in there right now. But let's say I want to add a couple of scenarios that we've just built. I can do that by adding or removing series, and I want to bring in the two scenarios we just built, the senior barista and the 10% tariff. And we can now see on the chart here all the different ways that might play out. So to the earlier point where one forecast often isn't enough, and as soon as I built this blue line, which is my baseline forecast, I'm pretty certain that in September I'm not going to land exactly there. That would be pretty coincidental, pretty spectacular. But hopefully I will land somewhere between the top and bottom scenario if I've really thought about this well. Hopefully I'll land somewhere between those two lines. And it really helps me to think and plan ahead and contingency plan. And obviously, as this dot travels forward, right, as we get through to further months in the year, this fan will change and it will expand or contract. But every time we can be thinking about, well, what are the actions we need to take if the probability increases of us ending up higher, if the probability increases of us ending up lower, what are the contingencies, what are the actions we can take, because whether it's high or low, it's going to be the same action either way. All those sorts of conversations become a lot richer when you've got a scenario analysis like this. Another obviously very crucial element of reporting on a forecast is the cash flow impact, possibly the most important. So our cash flow forecast grid like this shows you the opening balance for every period, all of the P&L impacts in and out, any schedules or journals you have set up in your forecast, any tax payments going in and out, and then hitting down to a closing balance. So a really useful way to, in a granular sense, look at what's happening to your cash flow. And then the final one I'll show here is any assumptions and rules. So another great way to audit your forecast. Any tax rules you've got to set up will surface here. And you remember the notes that I showed where you can attach a note to anything you do in the forecast. All of those will surface here as well. So you can take a look at what you've done and linking it to the theme of today, assess whether any of those assumptions now need to change because something has changed in the world, in the economic climate, or in the market that we operate in. Fantastic. So with that said, I'll hand back to my colleague.
All right. Hi, everyone. I was just typing away with some questions, so I'm just going to answer it live. Might be a little easier. Okay. So I was working on the question, actuals, how does the system know when a given month is closed in the system versus the accounting system, or does it just flip on actuals of the first of the following month, and it's up to the user to adjust that upper right selection? Okay, so basically what's happening with Fathom is there's a couple different things. What I'm first going to talk about is only relevant to QuickBooks Online and Xero. Maybe some of maybe MyOp and Sage, but we don't really have MyOp in the US, so we don't really focus on that. And then I think, I'm not sure if Sage is automatically updated. I have to check on that. But with the two that automatically update, you have two options. You can have most recently completed calendar month, and you can have current calendar month. When it's most recently completed calendar month, the idea is that, okay, so we're in June, May is done. You know, even if it's June 1st, 2nd, or 3rd, I know that oftentimes your books aren't kind of completed. So that's when it's just kind of, you're just like aware that your books might not be closed, but you still have automatic updates, meaning that every single day Fathom is getting updated. So if you do make a change in May, you know, where we are in June, that will automatically update. Or you can do current calendar month. And when you have current calendar month, when you're in that forecast and then you're choosing the rolling from, it will always be in the current month. So it would have been in June, but June is not closed. So then you would go back and you would roll from May. So that's when the user kind of has the choice of like, okay, I do want current data. I want it building. I want to see it coming into Fathom to the current day. But I only want to roll my forecast from the most recently completed calendar month. So then you would choose the previous month. Hopefully that makes sense. With QuickBooks Desktop and Excel and some of those other ones, because they are not an automatic connection, the idea is that you are updating it when your books are closed. You're going into Fathom with either of them, you can totally update them more often. Like I can go into an Excel file and I can put to where I am now in June and upload it if I'd like. And same with desktop. If you want to come in and just like update it halfway through the month, go for it. But the idea with that one is a little bit more on the user to know to update the platform. Okay. Can scenarios go more detailed in an account? So if we want to dig down revenue, it seems it can only go high level. So something that's important to know about Fathom is we don't really dig into the accounts more than how your chart of accounts is broken out. So if you have, 5 different revenue accounts, you can make changes on each of those revenue accounts, but you can't go into one of the, general ledger accounts and break it up more in Fathom. That does need to be something from the source accounting system. If you want to have different you have different products that go into your revenue. If you want to see each product, the forecast each product, you do need to have that separate account. So you can't really dig in more detail. But what you can do is use the drivers. And so you could, maybe you have 5 products, you have driver, product 1, product 2 as different drivers. And then you can build a formula on top or inside of the revenue account. And that's kind of a way to get a little bit more detail. Let me know if that makes sense. Or if you have any other questions with that. How does micro-forecasting and scenarios work with 2 company consolidations at the class level? Okay. 2 kind of separate things. I'm thinking a little bit. So when you have a QuickBooks file or a Xero file and you have divisions, classes, locations, I'm not sure what they're called in Xero. When you go into our forecast, you're not going to see those classes or locations. They're rolled up. You can't differentiate inside of the forecast those different classes. And also, if you pull out each of those divisions as their own company, you can then treat them individually. But then if you consolidate them back together, you're still not going to see them separate inside the forecast. The consolidation is the consolidated forecast is just a forecast on the consolidation with everything rolled up together. You don't have the individual classes or locations kind of broken out in the forecast. So it is more done at a top level versus breaking in. Of course, if you pull out the division as its own company, you'll be able to forecast that individual class location as its own. But once they're back together as a consolidation, it's just kind of all rolled up together. Similar to the previous question, you can of course make drivers and be like, marketing class A or whatever you want to call it, driver, and there's like a certain metric that you put in as a driver, and then you add it to a formula. And then you also have class B metric driver, and you add them together, but they're kind of just going to be rolled up together. Can you compare actuals to forecast? Yes, kind of. You can save your forecast as a budget, and then you can do budget to versus actuals, variance comparisons. You can always do like a last 6 months and a future 6-month forecast. We are currently working on better comparatives for actuals to forecast. So I don't know the exact timeline of that, but it's been requested a lot, and so it is on our radar. We definitely want to make better comparatives so you can have budget versus actuals versus forecast, because right now you have to save your forecast as your budget, and if you have a pre-existing budget, you're like, well, I want that. So we're working on that, and hopefully that'll be better soon. And can you set up tax rules for multiple states? I think, let me check. So it's kind of more, so Fathom sometimes is more like about like averages. And so you can, if you have like a tax expense or withholding or all the taxes, I'm not a tax person. It's more like just you have like one tax and it's on the whole thing. You can make withholdings and sales tax, and you can turn them on for specific accounts, but it's not like you could turn on a tax for one account and split it with 2 different types of taxes. Hopefully that makes sense. If you have any more questions, you can always reach out. Is there a way to leave notes in each scenario that you create so it's clear when toggling on a scenario what the scenario entails? In complex scenarios, there could be multiple changes reflected in the driver formulas, microforce, and etc. Not exactly. Let me check on something, and maybe I'll share my screen. Give me 1 second, because we do have assumptions, but I'm pretty sure those are just in, they're not in the scenarios, but I kind of want to check on that before I confirm or deny. And I don't actually know if I can share my screen on this thing. Oh, maybe I can. There we go. Okay, let's just take a look together really quick. Yeah. Okay, so when you're in a forecast, in the P&L on any of your accounts, you can add a note here, and you can include in the report, so you can include this note on this value rule inside of the report. Now, when you have a scenario and you're turned on, similarly, you can also have a note on the value rule inside this scenario. So yeah, I'm pretty sure you could do what you want. You're basically putting a note on the value rule, so whatever change you made, whatever is happening, and then in the report that you build for the scenario or the forecast, you can include the assumptions report, which will then have the note talking about why you did what you did. Okay. What is the difference between the terms budget and forecast? That's a great question. They can be the same or they can be different. I think that oftentimes it's just depending on how you want to look at it. People use the forecasting tool to build a budget, but sometimes, I don't know, this is maybe a personal opinion, sometimes when I think of budget, I think of like staying within, like you don't want to exceed a budget because that's what you've given yourself. And so sometimes there's like forecast. It's like, well, let's forecast beyond the budget. What happens if we do this? Are we going to be able to exceed that? And then there's also targets for like KPIs. And sometimes people use their budget as the target. But again, sometimes I think targets you mostly want to exceed and budgets you want to stay within. So it is a little bit of a personal opinion, because just like I was saying, you can save in my budget, I've saved my forecast as my budget, but sometimes people just want a budget and a forecast to be separate. So it is a little bit up to you. Okay. So if a hire has revenue impact, like hiring a sales rep, I can model the expense on the rep in the micro forecast, but I would need to use a scenario to model the revenue increase, correct? It's a little bit of a confusing question, but let me see if I can figure it out. So when you have a new hire, you have their salary, expenses, payroll, whatever, all the things you've set up. You can also add in incoming. So this is a new cook, and I expect them to maybe, be a good chef and bring me more revenue. But then I can also be like, well, I also expect them to have expenses. So like staff equipment. Be like, well, I have to buy them a uniform. So maybe it's like a one-time fee. I don't know. Just make it easy. So and that's all kind of sitting inside the micro forecast. And then in the scenario, when you create it and you turn on that new staff, it's now pretty much, it's now kind of exactly the same as that micro forecast. Obviously, I had a few of these turned on in the non-scenario, but it's basically just the scenario is saying, hey, I want to do this, but I also, now that I have this new staff, I could come over here and be like, okay, well, I'm going to change my baseline from this formula, and maybe I actually want to do a smart prediction of the last 12 months. And so now I've changed my forecast baseline for my revenue while having that new hire turned on in this scenario. And then again, of course, as soon as you turn that scenario off, everything reverts back to what it originally was. Let me know if I answered your question. I know it's a little confusing. I'm reading through them. I think, okay, that's all the questions that are here right now. I'll give you guys a second, unless there's more. Oh, let me chat. Oh, there's a bunch of things in chat. How does micro forecasting a scenario work? Oh no, you put that in the questions. Thank you. Do you prepare a forecast for each entity in your consolidation and then consolidate report, merge them, or do you forecast at the consolidated level? Because when you consolidate, it's not going to pull over all the forecasts from the companies. However, one thing around that, which again is a little bit like not the most perfect, is that in the individual forecast or the individual companies, when you build a forecast, you can save the forecast as a budget, and then when you and for each of the companies, and then when you consolidate them, it will consolidate those budgets, and those budgets are from the forecast, and then you can create your consolidated forecast from the budget, which is the consolidated forecast from the individual companies. That's one way to kind of pull everything through. Let me know if that made sense. So general question, project client level. We do not have project level right now. It is something I really personally hope Fathom will add. I will put your request in the product board. Please, to anybody, if there's something you want to see that Fathom doesn't do, please tell us, because we do drive our updates based off of what you guys want to see. So I will add that in there. If you save the forecast as a budget, does the budget then change as you update the forecast? If you save the forecast as the budget, does the budget then change? No. The budget once the forecast is saved as a budget, it is a static budget. It will not change, but the forecast will continue to update as actuals and changes are made. Yes, we are working on more robust forecast to actual and budget comparisons. Does the consolidation pull the established budgets from individual companies? Yeah, if you have budgets in the individual companies, it will consolidate them in the consolidation. Okay, that's from the chat. I'll go back to the, yeah, same question. Okay, anything else that I can answer for right now? Would Fathom develop weekly forecasts to the following month line? We don't have weekly right now, and I think I might have mentioned someone else. Again, kind of similar to projects, I do hope that we add that. It would be kind of a change to our system, so it might not be soon, but it is something we want. And I will also add this request, because the more requests, the higher it goes on the list. Okay, so that's all the questions I see for now. I'll give you guys just another minute to send any other through. I guess chat or Q&A is fine. And then if you think of if the webinar ends and you're like, damn it, I had another question, just reach out to chat support. They will be able to not only answer your question right away, because they are live agents, but they will connect you to somebody Live AP data. Do you mean accounts payable data? We have like live data with Fathom is QBO or 0 when you have it set to current calendar month, and then it is updating every single day. But then we do have a feature for QBO and 0 for AR and AP connections, but that is not live. That is kind of more similar to desktop or Excel, where you kind of just have to update it when you want to update it. And then you can build tables, charts, and graphs based on that data. There's more questions. How do I get the micro forecast to overwrite the forecast? So if I have 10,000 on an account and want to see what happens if I cut that, I don't see a way to do that without changing the forecast. If I get the micro forecast to overwrite, I'm a little confused by your question. I might just respond to you later with an email once I figure it out. And please add the request to allow consolidated forecasts from individual companies. Yep. Of course, I'm glad you enjoyed the webinar. We will definitely keep doing them. Changes to the micro forecast seem to only add to the account. I'm so sorry. I don't know why I'm confused by this question. Changes to the micro forecast only. Yeah, wait, okay. So a micro forecast, kind of in its name, is just the accounts that are affected in that micro forecast. Yeah. So it's not actually changing the forecast. It's sitting on top of your forecast, whether it's sitting on top of the baseline or it's just turned on in the scenario. The only changes that are made are in that micro forecast. So actually, if we look at a micro forecast, I'm just gonna open up one, and I'm in here and I come over and I want to, like, if I reference my chart of accounts, if I reference my revenue, I can't really, and I do this, see how nothing happened? It's because there's nothing in the micro forecast. The micro forecast doesn't have data within itself. You have to give it its data. So it's only sitting on top of it. So it's not going to like change the forecast. It's going to add to the forecast. Hopefully that kind of makes sense. Again, please reach out to chat. They'll be able to help more after this. One of your previous webinars, you presented how Fathom can be used by property managers. Yes, that was me. Is there an API connection in the future with some property? Not exactly, but those are good ones, and I've heard them before, so I will make note of that in the product board. We definitely want to continue to expand, and also if there are any other industries you guys would like me to do a webinar on, please let me know. I had heard that property managers and real estate, a lot of people wanted that, so I did a webinar on that. Happy to do more, so just let me know. Yeah, let me show you really quickly where training is. So if you just go to fathomhq.com and you go to resources, we have pre-recorded guides, webinars, and videos. We have some stories about the product. Here's our link to live webinars. We have one every Monday and Friday. But if you go to the Help Center and you go to Forecast, and then you're like, what was she talking about with micro forecasts? You can just come right down here. And then there is little embedded videos in this exactly on how to do pretty much everything that we just walked through today. So definitely check out the Help Center. Would you add an account to add something to the outgoing categories that does not exist in Q? You can add new accounts. So you can definitely add an account that doesn't exist yet and like make new things in Fathom as well. How about assisted living facilities? Do you have webinars for them? Not exactly. We do not. I think that might fall a little bit under the property management, just kind of like managing multiple properties, but I will make note of that. Again, I will say industries, we usually focus on what we get the most requests. So if you have other living facilities to get the sign up to Fathom, and then they all request a webinar, and then I'll do it for sure. I'd like to see more nonprofit organizations, single business use of Fathom. Okay, we can definitely do that. I feel like we have a lot of use case. We actually do have a lot of nonprofit things already going on, or not, I guess. If you search nonprofit, Fathom tips, not nonprofits and not-for-profits. That's just already in our help center. Go back over to Q&A because it looks like a couple more things. Do you guys have training videos on cash flow forecasting and budgeting? Yeah, if you just go back to that forecasting section or the recorded, there's definitely more videos on cash flow forecasting. I'm seeing if hopefully I didn't miss anything. Okay. Do you offer nonprofit discounts for using Fathom? We do. You just need to reach out to us and show us. I don't remember the name of the document, but reach out to us and reach out to chat support. They'll connect you with the proper person. It'll be me or somebody on my team, and then we can get that added for nonprofits. But we need proof. Okay. Anything else? Okay. I'm gonna call it here. Thank you so much for joining. If you have other questions that pop up later, remember, you always have chat support. You can reach out to us. We're always happy to help, and we do have an abundance of resources available. Thank you so much for taking the time out of your day to join this. Keep an eye out for other product webinars. Follow us on LinkedIn, and I hope you all have a wonderful rest of your day. Bye, guys.